Hello, everybody. Jim Malone here. It's Dallas Trading Floor, and it is a Wednesday, I guess it is. Yeah, it's October 8th, and the market looks like it is moving a little bit up from here, which is good. We're getting some strength. I'm hoping that we're going to continue on this trend up. Again, it's before the election, it's just kind of really bouncing all over the place. Fastly is a little bit below the buy point at 117.70, but it seems to be gaining strength. So it's just, again, it's the strangest strange in that, it just seems to be a very hard market to trade. And, so let's just basically get into it. Here we go. Yep, there we go. All right. Yeah, we're still in a confirmed uptrend, which is great. I mean, we are moving up. The NASDAQ is 1114,414 when the slide was taken. The S&P is up a little bit, about 0.72%. Also, the Dow Jones is up. It's up about 0.32% or about $90. So that's good. The only concern here, of course, is the volume is down a little bit, but not a lot, only about 8% off of the normal volume. So we have a nice, it's starting to set up nicely, but you never can tell. So let's take a look at the most important. This is when I look at this every day, and this kind of determines direction. And of course, we are in a confirmed uptrend. And if you'll notice, we have moved beyond this 50-day moving average. Now, why is this so important? Why is the spider so important? Because the S&P 500 basically is one of the broadest market indexes, without getting too broad, that shows the overall direction of the market. And right now we touched down here at about on about the third week of August, and then boom, we've moved down. This was March 23rd, excuse me. Then we moved up, and then as we have come above the 50-day moving average, that is kind of where we got a little bit of a pullback, and then we're moving up from there. So this is a good level that the spider is at. Anything above about 330 or even 325 is pretty good, and we're up. But the volume is down. This is somewhat concerning, but the overall market seems to have made a turn, which I hope it does, because that's very, very important. Now, the next slide here, of course, I'm going to show you is the QQQ, and this is where the growth stocks all live. They all basically live in the NASDAQ 100, and this is where most of the growth has been in the market. So we want to watch this one carefully. The key level on this one, 275, we're at 281.03, which is great. I'm glad we're at that level, because that shows a lot of strength, and the strength is what we want to see coming into this election, because it does look like we may get another stimulus before the election, and that is going to be bullish on the stocks as well. So I want to show you a psychological indicator that I like to use. It's called the put-call ratio. And why do I show you this one? Well, the reason I show this is because typically there are more calls than puts that are sold out there, that are purchased out there. So when the put call ratio is about when the put call ratio is about 1, that means 1 call for every put is sold. Well, currently we're less. There's more calls being sold than puts being sold. Now, why do I look at this? Well, when this turns up, this potentially shows a change in the overall market. Now, the last time that we saw this, where the puts were higher, much higher than the calls, this is March 23rd here. This is March 23rd, and this is when the market bottomed. Now, the question is, the market looks like it bottomed in the third week of August, and that indeed is the case. And that's when it sort of hit this 0.5 level, puts more, and then it started to move up. So we are still kind of trying to find a level. I would be a little bit more comfortable if the trend was solidly up, but it definitely turned. As you can see, there's from high to low, and it definitely turned there at about the last week of August, and that very much corresponds to the bad market that we had in the early part of September. As you can see, it pushed up there. When this thing kind of moves very quickly, that's when we have a market change and a market correction. So I think we're out of the woods, hopefully, on the correction there. And I hope we are, because that would be a very good thing if we were. Because I do think that once a lot of these things are resolved with the stimulus and with the election, then I think we are possibly going to get on a rocket sled. Now, is all the market going to do well? I don't think so, unfortunately, because I think a lot of the cruise lines and the hotels and the leisure industry, it's been hurt really hard. I mean, there's a lot of restaurants that just are never going to open up again. A lot of people are employed in this area, but that's the glass half empty. The glass half full is this: the stay-at-home economy has accelerated. And so the things that are in the cloud, the things that are 5G, the things that are self-driving cars, the things that are electrified cars, these are going to go big. And one of the stocks that I would like to show you, this is kind of in the bullpen, not ready to come up at bat yet, but very close. Actually, I did buy this. I nibbled on this one today. It's right at a buy point. It's called Marvell Technologies. And this is a stock that is totally in the 5G play, and it's up nicely today. It's on what they call the leaderboard. This is IBD, and I don't get any love from IBD. I wish I did, because I really promote their stuff. But it's up in volume, it's up in price, it's in the right industry, it's got the right composite rating. I'm really liking this, and just wanted to show you that really, really quickly. So, just for full disclosure, I want to show you what I currently have in my portfolio. I'm moving out of cash into some of the better names and basically at buy points. So let's kind of look and see kind of where I'm at currently. I have Oracle. It's finally seems to be moving off the buy point at 60.50. I'm kind of getting a little bit tired of it. It just seemed this TikTok deal doesn't seem to be moving the right way. I might be getting rid of this. I've made money on it just barely, but it just hasn't performed as well. Taiwan Semi, I think, is going to continue to move up into the end of the year, because every major chip manufacturer is making a lot of their chips at Taiwan Semi. So this one potentially is very good. It's up also on volume as well. Again, I'm still a Tesla bull. I'm out there. I'm being a Tesla bull. I'm in Tesla as well. And it's moved up a little bit. There was a interesting article that came out today. One of the top analysts is basically pushed up the price target to the end of the year at about 575 on Tesla. So I do think that, I know that it's up and down with Tesla, but I wouldn't short Tesla. I do think we're going to come in. I think they're going to have a great blowout quarter coming up here. So I do think they're going to be really good. So I'm in Tesla, and I'm also in Sorrento Therapeutics. This one has been somewhat of a disappointment. I may be getting rid of this. I don't know. It's sort of on the bubble right now. I haven't really lost any money. Haven't really made any money. I do have a call option on it. It's a very inexpensive stock at 11.16, but quite good. And of course, everybody knows about Fastly. We put out a trade alert on that. It's down a little bit. It's at 115.69. It's down about $4.64. These are very volatile stocks, so you got to be. It's adjusting in there, and the volume is up though. But I do think that this one is going to bounce around a little bit. But I think this is going to be pretty bullish on this stock as we stand now. One I added today. This is an interesting stock called Marvell Technologies, and it's a 5G play. And I think that one also has some very good potential. Very, very close to the buy point. And I'm going to analyze that stock a little bit later using a little bit some of the better charts that I have, so you can see that. And of course, if you are interested in signing up for our action trade alert, super easy. Just go to www.DallasTradingFloor and then sign up for the free action trade alert. So thanks so much for that. And let's get into the questions. Thanks again. All right. So let's see. Need some good points. Need more good points. I do. I always am looking for those buy points Oh, wait a minute. I got a lot more people. I'm sorry. I should have started at the beginning. I didn't start at the top. Wow. Hi, Jim. Thoughts on domestic airlines, BLU or DAL? And I bought some Fastly. Okay, nice, Mr. Sid. Thanks for that very much. I want to show you some of the domestic airlines. I'm really leery right now about the airlines, and it does have nothing to do with the business. I just think that it's just tough to be in the airlines. It's going to be a bloodbath. I have to admit, in the airlines, it's just the demand has dropped so much, and even the best run airlines out there just aren't getting the love. And I want to show you DAL, Delta Airlines right here, and this is, I think, it's rallied. It's definitely rallied, but you know what? Here's the problem with Delta Airlines. Until this 50-day moving average crosses the 200-day, I can't logically be in it. Now, it's true. You might be able to make some serious money here because it's only $32 a share. But let's look at the buying criteria. Unfortunately, it's just terrible. 4 out of 9. It has to be 6 out of 9 for me. Let's look at the funds. Well, and this sort of tells the whole story, unfortunately. And that is, we have rats that are exiting the sinking ship. You notice how in December we had 2108 funds in it. In March we had 1884 in it. June 1488, and September, just this last month, 1441. What does this tell you? At least it tells me we have people leaving the office right now. We have people getting out of Delta Airlines. So, and the problem is, it's not about buying bargains, unfortunately. It's about where the big money is moving. And the big money is moving unfortunately, it's not moving into, the airlines. And Delta Airlines is probably one of the best. So I can't recommend Delta. So, but let's see if we can, let's look at JetBlue. See if there's any light in this kind of bad story. And I'm looking at JetBlue here, and again, the trend is down. Not good. This is a little better chart than DAL, but it's a smaller airline. It's very well run, but we have the same problem in this airline, and that is decreasing fund ownership. It's just not working. 4 out of 9, it's not working. I can't recommend any of these stocks in the airlines. I just can't do it because I at least until this COVID thing is over and we have regained some of the resort and travel business. I don't think you want to be there. Let's concentrate on things where you have a chance to make money. Even if you pick right in the airlines, it's going to be tough. If the market were in a correction like it was up until really about last week, then you might want to consider shorting some of the airlines. But in an uptrending market, shorting is very dangerous. So I wouldn't do it. And I just don't think you can be in the airlines. It's painful. It's painful, but I don't think you can be in the airlines. Okay, so what do you think? Do you think Fastly is going up? Yeah, I do actually, because as you know, things don't typically go up in a straight line. They kind of jump and jerk and all that. So I want to show you the chart on Fastly. I still think this is a superior chart, an absolutely superior chart. As a matter of fact, there's even a blue dot, which is a buy recommendation. On the weekly, it's hit a top level. Let's look at the daily chart. The daily chart's been bouncing around a little bit, but I still think this is great. The buy point again is 117.79. That's your buy point. It's below the buy zone. It pulled up and then it's pulled back. But you know what? I think it's gonna move up and down here, and then we're gonna see another movement up on it because I just think it is looking like the funds made a big move in it. and now they're backing off a little bit, but I think it's going to continue on. So a little bit of patience. Rome wasn't built in a day, so we want to be in it probably a little bit longer than 2 days. And I do think it will move. I do think it'll move higher. But the question is, will it settle back down to the 21-day? It might pull back, because this is a very steep angle. But I still think that it's got an excellent buy point. So let's kind of look at the angle that we're going. So this is the prescribed angle. It's kind of pulled up, and then it's going to pull back down. It may pull as low as 100, by October. But I still think it's gonna. I still think it's going to trend on this in this channel here. This is the channel that I think it'll trend in, right there. So I think you're going to see it's going to trend up in this channel. Now it pulled up above that channel, but I think it's going to pull right back down to that channel, and then it'll be right in that. And I do think it's going to march forward there. It's got a relative strength of 99 there. It pulled back a little bit today. You can see by this little pullback here, but it's still a relative strength of 99, and that means that it is outperforming 99% of all the stocks out there. So those are the kind of stocks where I want to be, and I definitely am in Oracle. So there you go. Walmart and Oracle are looking good. Yeah. How long do you hold Oracle? I wish I knew how long I wanted to hold Oracle. I have a little kind of a backstory. I have a brother, and he's great. He's a great stock trader, but he sometimes he's very stubborn. If he thinks something is gonna go back up, he'll just hold it forever. He actually ended up holding Oracle for like 10 years for it to come back, and finally he sold it. Now of course it's coming back up, so whatever. But no, I do think Oracle is gonna move, and let's take a look at the chart just to see if Oracle is gonna move. Now I have this on my small portfolio, so I'm in the stock. In my small portfolio as well. It's basically pulled right back into the buy zone, and I do think it's not. This is not going to be probably a superstar. I mean, it probably will pull about to 62 or so. It's 60.90, which is right in the buy zone, and it's still pretty. It's looking pretty good. It's 6 out of 9, which is minimum for that. My minimum requirement. But it does have, it did come down a little bit. There's a little bit few more, it's sort of even on the number of funds that are in it. 3118. That's a lot of people in there. And so I still like this one. My biggest issue on it is it only has a relative strength of 66. So I might, and I say might, I haven't done it yet. I might get rid of it from my small portfolio so I can redeploy capital. But right now, I am still in cash in a lot of my positions in the small portfolio, so I don't know if I'll redeploy it. But let me just show you kind of how that looks. This is the small portfolio that I'm trading currently, and it looks like a big piece of pizza, which is great because each one of these slices is one full position. There's 8 full positions in the portfolio or my pizza pie, and as you can see, this is as of right now, this is being updated. I have Oracle. I have 14 shares of that. Taiwan Semi, Tesla, Fastly, Marvell Technology, and Qualcomm. I definitely am in it. Now, Qualcomm, I'm down a little bit on Qualcomm. I'm down 90 cents, and I'm down a little bit on Marvell Technology. Now, I do think that that's going to come back because of the kind of the sluggishness that I've seen in Oracle. Once I allocate the 2 more cash positions, if I can't find any, if I find that stocks are sluggish, I will probably sell them and buy something that's faster moving. Of course, Fastly done okay. We've done okay. We're up 14% in just a very few days, so that's not bad. So I do think that these have potential, but that's kind of the thing about Qualcomm. Qualcomm tends to be kind of slow moving, so that can be an issue with Qualcomm. Now, on the other hand, Walmart is the king the Mac Daddy when it comes to retail. It just, I don't know, they're just really good there in Bentonville. They really know what they're doing because this is a retail stock, but it trades like a technology stock. So, they are taking on Amazon and they're winning. So whereas Amazon is not, see, right now Walmart is trending up, but let's look at Amazon just in comparison, AMZN, and you know, Amazon is the Mac Daddy of online retailers, but guess what? It's moving down. It's below the 50-day moving average. Now, is this the end of Amazon? Not on your life. It's still great. Let's look at the weekly chart. But the trend, at least in the last few weeks, and it hasn't been very long, has been down. Whereas Walmart looks like it is trending. Oops. It is trending in the other way. It's trending up. Walmart is trending up very slightly, but it's trending up. So I am very psyched on Walmart. And I think they've done a terrific job in taking on Amazon Prime and all the other things there. So it is it's pretty interesting when it comes to when it comes to Walmart. So thanks for that question. Why is okay? Let's see. Oh, got in it fastly. Ooh, that's a little bit high in after hours. Okay, so I think you'll be fine. I totally think you will. You'll be fine on this, Marcin. I think you will. I think you got in at a great price at 101. I think there's going to be a little pullback. There's going to be a little bump here, but I think you're going to make money. I think you're going to make money on that, and hopefully I will have another one coming up. Marvell Technology is right on the bubble. It probably, I'm not putting out a trade alert on it yet because it hasn't totally moved the way I'd like it, but it might. It's an important 5G stock, and there we go. So let's look at the daily on Marvell Technology. Here we go. Great. And this is Marvell, and it's pulled above the buy zone, unfortunately, right now. Yeah, it's moving up. Well, just a tad. But it is moving up. It started to move. It started to make its train tracks here, and it's move up. Buy point being right here. Now it's a consolidation base. The buy point is 39.40. This is the one. It isn't quite as strong as Fastly. It only has a relative strength of 90. I say only. That's very, very good. But it is not as powerful. So if this one breaks out, and I think it might, then it will be out in the trade alerts. But right now the checklist is good. It's 8 out of 9, but it's not, stellar. But one of the things I like about this, Fidelity Contra Fund is in this. This is the good housekeeping seal of approval, and we have a increasing. Well, not quite, but we have a lot of funds in this, and it looks like they're moving more into it. Now, the thing about Marvell is that it typically is more oriented. There are more funds in it. 61% of all the shares outstanding are funds. So this means that this stock probably will be very stable, relatively speaking, once it moves beyond the buy zone, because there are so many funds in it. So that's what they call strong hands, and we definitely have them there. Now, is it time to issue a buy alert yet? Well, no, not yet, because it hasn't broken out. It hasn't broken out. But I definitely think that this potentially could break out. There would have to be a lot of buying. This isn't going to be the breakout that Fastly is, but there could be a lot of buying on this one as well. So I just want to show you that Marvell Technologies. So I need to get to the people on TikTok. And wow, I've got a lot of people. Thanks for tuning in today. Appreciate it. Is the action trade alerts, does it come in the mail? No. The action trade alerts are email, and that's to cut the cost. But if you want to get the action trade alerts, very easy to do. If you're on TikTok, all you do is you go to my profile, you hit the you hit the little link. It's a little link, and it takes you right to the sign up page for the action trade alerts. So that's how you can. That's how you can get on the list for the action trade alerts. Now, if you're on Dallas Trading, if you're on YouTube, Facebook, Twitch, and Periscope, the way to get on Dallas Trading Floor, and I'll just show you what it looks like, is just go over to the website, www.Dallas Trading Floor. This is what it looks like. Here, it just says Dallas Trading Floor. It's kind of a generic site. I got to get a better site. But it says right here, subscribe to free trade alerts, just first, last name, and your email, and then hit that subscribe button. Of course, it's all free. And by the way, if you're learning to trade, and this is where I started, I was very fortunate 20 years ago to learn about William O'Neill, basically when IBD was getting started, and it's really done well for me. And one of the things that I learned was by reading the first edition of this book, How to Make Money in Stocks, A Winning System, Good Times or Bad. And of course, it's available on my website if you go to www.DallasTradingFloor. And I actually recommend both of these books, getting both of them, because this is the main book, the orange cover one, and then this is the How to Get Started, and this is the sort of your action steps to get started. I think that learning how to trade and learning how to trade the Can Slim method initially is one of the greatest investments that you can make. I have an MBA in accounting and finance, and I can tell you what, I went through a very good school. I was in Silicon Valley, not trying to toot my horn, but I did a lot of stuff with major Fortune 500 companies. Did I learn how to trade stocks? Absolutely not. I didn't learn how to trade stocks until I read William O'Neill's book. I didn't. And once I did, I got into it. William O'Neill has created a language for understanding the stock market and how to buy. And it's not what you think. So I do recommend possibly getting that book. And again, if you get it off my website, that would be great, because it helps keep me on the air. So I appreciate that very, very much. Okay, so let's see if I can get another question from TikTok. Sorry to... Okay, Sonny's back at the airport. Oh, okay. Oh, is it a good time to buy? Is it a good time to buy? Well, the way to find that out is to go to the kind of to the market trend. And again, I want to talk a little bit about the market trend here, because I think it is so important in terms of where we're at now. The chart I'm going to show you now, the next chart I'm going to show you is basically the this is the NASDAQ composite. This is everything on the NASDAQ all at once, and this is really, this is even more so than the spider. This kind of showing you the market. As you can see, this is basically in the last part of February of this in this year, when the COVID thing hit. You can see we just dived down here to the 50-day moving average. Since then, we have dived all the way down. Now, right here, right here, this is where it turned. This is where it turned about 3 weeks ago. Now we've moved above the 50-day moving average. Why is this important? Well, the reason this is important is because the way the market is trending overall determines how you should trade. If we're in a confirmed uptrend like we're in now, we want to get out of cash into the market. We want to be fully invested, or maybe even more than fully invested. What I mean by that, on margin. If the market is in a uptrend under pressure, we want to take 50% of our stocks off the table. We want to be 50% in cash, 50% in stock. If the market is in correction, like it just was, then we want to go to 100% cash. I know that's severe, but if you do that and you trade that way, you will get most of the uptrends in the market and limit your losses. And that's really the key. That's really the key to doing well. So let's see. Here we go. Asked about Rice targets. Oh, NCE targets today. Well, Siri has gone ballistic here. I have to get her out of there. She was talking back, and I had to discipline her. So sorry about that. What about the targets on NEO? Okay, let's look at NEO. A lot of people have been in NEO. I was in NEO shortly. I haven't been in NEO since for a while. I haven't been back in NEO since the last earnings on NEO, because I do think that it's definitely not a stock to own, it's a stock to trade. And that's why I am not really a long-term investor in NEO. I am sort of a trader in it, though. And let's look at the NEO chart, which is kind of interesting. We have a tremendous relative strength. It's 99. We are moved above the buy zone, and we are basically at essentially very close to what might be a buy point. Is it buyable? Well, that's the question. Let's look at the daily chart. It's moving very nicely up this 10-day moving average. So that is good. So if I were to buy this, and this is, by the way, this is a flag pattern, by the way. So you'll know it's up, and then it kind of goes like this. So we may see NEO go higher based on this. The only thing about this is that this is on the daily chart, and typically this isn't reliable as if it were on a this isn't as reliable as a weekly chart. But this is a high tide flag, and this is very bullish. Now it's pulled back, but let's see if we have any other kind of fundamental support for this. We do have some of the, we do have increasing fund ownership. I really like seeing this. The checklist is looking good. The owners, again, are there. Let's see if there's any option activity on it. Yeah, we've got option activity. So even though this is a relatively inexpensive stock, I think that this may break out very, very quickly. And I'm going to keep a watch out on NEO, because I've been in it again, and it's been on my watch list. I don't have a clear buy point on it, though. That's the problem. I think that it's potentially viable at the 10-week line, at the 10-day line. Sorry, 10-day line, and that would be currently at the price of 2076. It's at 2143. So I think this, if tomorrow you see a little bit of a pullback, maybe to 2075, 2076, then I think that, and a reversal on that, you might be able to buy it. It's pulled back a little bit. It's down a little bit, 13 cents. So I like this stock. I admit this is a very good chart, and definitely something that you could probably make some money on. So thank you for that from TikTok. Thank you for that question. Let's see. I'm going to see about the next person. Okay, so hey Jim, why is Fastly dropping? I wish I could say it, because nothing ever goes up in a straight line. I don't think it's going to drop forever. Now, I could be wrong on this. Remember, everybody, and this is so important, if you bought Fastly, and I definitely did, you want to set your stop losses at 93% or 7% down of where you bought it. So if you bought it, let's say you bought it at 100, I'm just making this easy because I can do the math in my head. You multiply that times 0.93, that gives you 93. That's where you want to set your stop loss good till cancel. So set those stop losses on there, and I think we'll be good to go on that. So the next question is on BE Bloom Energy. This was a terrific chart. I wasn't really into it until, thank you very much, Dan. You brought it up. I really appreciate that. It wasn't on my radar, to be honest. I do think that towards the end of the year, towards the election, we're going to see more infrastructure spending, and so we may be in a situation where some of these energy stocks start working again. They just haven't been working. And this year, the energy stocks just haven't been working. So that's why I've kind of steered clear of them. But this one, it seems to be a different animal here. So let's kind of take a look at kind of where it's at. It's got a relative strength of 99. That is just tremendous. It is currently in a buy zone, by the way. It is a first stage consolidation. The pivot on BE right now, as we speak, is 1967. So let me put that out there to everybody on the chat. The BE pivot equal to 1967. Now, why is that important? Well, the reason that's important is because that is sort of where the stock is likely to base. So it's pulled above that, and it's pulling back to that. As it sort of settles at that level, that is where it probably will take its next move upwards. So let's look at the chart, and let's do some channel analysis on that. We do have a buy on this, by the way. This blue dot is very bullish. So again, this has been very interesting stock. So let's kind of extend the channel up here, and also let's take a look at the channel. And I think this is more likely to be the channel here. This is the kind of channel that we're looking at into December. So we definitely are going to see probably this thing trade in a range probably from about a low of about 1650 on up to potentially as high as $30 a share in the November December timeframe. So I do think that this at least if it continues on this channel, that we're likely to see it move higher. Again, one of the best things that you can do when you're buying a stock is to buy it at its near high, and you go, what? Why would you say that? Why would you say that? Well, it just so happens that stocks that are moving up tend to move up even more. So by buying a stock about no less than 15% off of its high, that's why we have put more potential there. Now, it definitely meets that category. Percent off a high, less than 15%. Yes. So it's at its near high. That's a very, very good thing that we're seeing. So this is a for energy stock, this is tremendous. We do have a lot of fund activity in here, 42% fund ownership. We have a blue dot. This is looking very, very nice. And you definitely have a buy point right now as we speak at 1967. So great stuff, Dan. I appreciate you putting that out there, because I think I didn't know about this either, and really like really kind of like what what you're saying there. Hey Chippo, what's your thoughts on PLL? The links to Tesla. This is the lithium play on for the batteries for everybody out there. The thing about it is that the problem I have with this, and they're in Australia. They are a mining company, and many of the greatest mining companies are in Canada and in Australia. This is really peaked, but this is what I call the problem with these thinly traded stocks is that when anybody goes into it in any way, it kind of distorts what they're going at. It went up to almost $60 a share, and of course it's pulled back down to 38. So it's very, very volatile, and it doesn't really have any fund support. It's got one fund in it, so that's not so good. And of course it's only got 5 out of the 9 for that. But that said, it does have a buy point, believe it or not, and the buy point is at $9.19. But we're so far above that, I just don't think you can buy it right now. I definitely would watch this one, see if it pulls back to that neckline here for the buy point on the consolidation. It's the first stage of consolidation at 919. So I do think that that would be a good buy. It does have, I think they have contracts with Tesla, but unfortunately, I'm just not in the mix when it comes to that. Who knows about those contracts? They may be cancelable, and there's a lot of lithium in the world, I have to say, and it can be, and you can basically take it out of seawater. So there's a lot of different ways to get lithium. There's a lot of different ways to mine lithium, and a lot of it, comes down to just doing it. So I'm not so sure that that might be the play. I'm not so sure about it with PLL. So that's my opinion on it, but interesting. Is it time for Apple? Well, Apple is a great company. It's a great stock. It's a great product. I mean, going all, everything, pretty much everything you can say about Apple is pretty good. The problem right now with Apple is that it's tending to be, there's just too many. It's really priced to perfection, and when they did the split that increased the shares by 4-fold, there's a lot of really good funds in it. I just don't know if they can continue to pull the rabbit out of the hat. It's 5 out of 9, but I do think though this introduction of 5G phones is going to be a big deal. But I think it's going to be a bigger deal for the chip companies that are in the phone. I think it's going to be a bigger deal for Marvell. I think it's going to be bigger for Qualcomm and Taiwan Semi. I think it's going to be bigger for the chip companies rather than the phone. That's kind of where I'm putting my chips on the table. Pun there. By the way, if you all know, Shakespeare said that puns are the highest form of humor. So I thought that would be interesting. I'm not that I'm comparing myself with Shakespeare. I would be great if I could, but anyways, my pun is I have my chips on the table, but they are primarily in the chips, and the chips are Marvell Technologies, Qualcomm, and potentially Taiwan Semi because they make all the stuff. So hopefully that's it. But Apple, if you've got profits in Apple, maybe you want to take a little bit of them. I do think it's going to be slow into the year. It's just priced to perfection. Great company. It's moving up the 50-day moving average, but is it gonna push up like it did before? Probably not. Not probably. Not probably right now. Just want to be for full disclosure, wanted to be totally on there. Okay, so your thoughts on BLD and IPB. These are both, of course, Iowa beef producers, IBP. I think that IBP is the biggest beef producer in the world. No, and I thought it was IBP. I apologize. It's Installed Building Products. I apologize. I guess IBP. I guess in Iowa Beef Producers was bought. I don't know. I think it was bought by ConAgra. I can't remember. This is looking pretty good, actually. It's new residential installations, services in Wisconsin and over 180 other locations. So, wow, this is pretty good, Mr. Sid. I like your stuff. 113, is it buyable? Well, it doesn't seem to have a real buy point. The last buy point it had was basically on a flat base at 76. 60. Now, that's not saying it's bad. It's moving just absolutely right up the 50-day moving average. The home builders like Lennar and D.R. Horton have been doing great because there is a pent-up demand for new houses. So this may be do very well that, but I just don't know enough about it. It's 8 out of 9. That's excellent for the checklist. So that's looking good. Let's see how many funds. A lot of funds are in there. So you know what? This kind of looks good. Let's see about the sector. It's excellent on the sector. 22 out of 179. That is great. That is great. I like to buy stocks that are typically in the top 20% of all the sectors. Well, if you look at that, that definitely qualifies for that. So I like this one. I like this one. This is not, it's a 95 rating. This is not a rocket ship. But I think this one looks actually very, very good. So if I bought this one, I would buy it at the pullback to the 21 exponential moving average, and that would be 106.82. So that would be the price that I would buy that one. That's a good one, Mr. Sid. I like that stock. I like that stock. So let's look at BLD. Now, BLD I'm a little bit more familiar with. This is also a very good stock. It's top build. And there's another one called Kirkland, which I think is really good too. But let's look at BLD on there to see kind of again, very nice. It's pulled above. It's a little bit extended from its consolidation base at 134.75 7 weeks ago. Well, no, but it's really in a profit taking zone. I can't really find a place to buy this one. It's a good stock though. Wow, this is really, really good. It's definitely got a nice checklist. 7 out of 9. That's good. I like to see it 6 out of 9 better, and this definitely is 7 out of 9. So that's good. Ownership on it. Nice increasing fund ownership. 607 funds are in it. That's very nice. Invesco Oppenheimer is in it. That's another really good fund. Just FYI. The industry rank is excellent at 15. Wow, I'm kind of liking this one for a into the next year buy. I mean, because that is definitely true. I mean, along with home, this should trade similar to Home Depot. So let's kind of look at the Home Depot chart to see how Home Depot is trading, and let's compare it to Top Build, because I think that's kind of the choice that you could make. Home Depot is one of those truly great stocks, and it's not spectacular, but it's just moving right up that line. There's a buy point on Home Depot at 292.95. It's a little bit below that, but it looks like it's just marching right up that line. Is this going to be spectacular? Well, over the period of time, it's got a 100% checklist. So if I had to look, if I had to, it'd really be a toss up between BLD and Home Depot. If I were picking, between the two, I'd probably pick Home Depot, but just by a hair, because I think that BLD looks very, very good. Very, very good. And so that's very interesting. Yeah, very, very good. So let's see if we have another some more from TikTok. Okay, so IB, what was it? 30. Oh, 30 space also. Okay, cool. Let's look at space. Now I haven't, for full disclosure, I have not been in Virgin Galactic since the second quarter. And I sold right before the earnings came out. And this is a very twitchy stock. Twitchy stock. This is a very if you want to play this, this is not an investment stock. I just want to be clear about that. This is a totally, buy it and then sell it stock. The way I would play space, Virgin Galactic, I do think that coming into this next this next earnings, which is going to be basically in about 28 days, if I were to play this one, I might do this because I do think I could make some fairly good swag on it. I would buy it now and then I would hold it into, because it looks like it's got some increasing ownership. I would hold it into earnings and I would sell it right before earnings. That's how I would play space. And it is 5 out of 9, which is a little bit less than I like to see. I like to see 6 out of 9. But part of the reason that it's 5 out of 9 is because they haven't made any profits yet. But believe it or not, there are 14% funds in there. And this is one of the only pure plays on the space business. And I do think that's going to be very, very big business. But right now, it's very hard to play that. So you really have to do space or, maybe Lockheed Martin, but that's really a defense stock. So it's this is one of the few ways that you can play the space biz. I do think that if this would be a more risky portfolio here. I do think there is actually a formation, a cup formation with a pivot at 27.55. Now this is an odd stock, but I do think it is going to pull up to approximately this level, and hopefully it'll move beyond that. But I think there's maybe at least $5 a share upside potential between now and the earnings. That's kind of what I'm seeing in this this chart pattern. That's sort of what I'm seeing. So I do think that this is potentially, as much as you could probably make 20% gain on this. But I would definitely, if I bought this, I would definitely be out of it before the earnings, and the earnings are in 27 days. So I just wanted to be very clear on that. I wouldn't hold this through earnings. I just wouldn't hold it through earnings. I just wouldn't hold it through earnings, but there's potential there. Earnings are due on the 15th of November for for space. So I just wanted to put that out there. But this is more speculative. I wouldn't go in with any more than about a half position on this one. This is not a long-term hold. It is definitely a trading stock. All right. So what is your thoughts on SFIX? SFIX. Let me look at that one. SFIX. See if, there we go. Put that in there. Stitch Fix. I wish I liked this one more because I think it's a really cool concept. Now that JCPenney's has gone out of business, that's where I shop. You could tell because I'm, middle-class Joe guy. I love JCPenney's. It's so sad it went out of business, but it just isn't Kansas anymore, Toto. I mean, it literally isn't. It's either you shop online. It's basically either shop online or you go to Walmart, and I kind of don't like that. That's sort of, I like both of them, but I kind of want some middle ground there. But Stitch Fix is a cool idea for everybody out there that doesn't know about it. Basically, what you do is that they get the right clothes for you, and then they send them to you kind of on a subscription thing. If you don't like them, you send them back, and it's a kind of a cool idea. I probably would be I should be a Stitch Fix customer, but I don't think I want to be owner of their stock because I just don't like this. I mean, it does have a a cup with handle. It does have a buy point of 30.44. I don't know about this stock. I have to. I'm the jury is still out for me on this one. I just want to kind of see if there's anything to do with that. It's got a relative strength of 87, which is excellent, but, and I say but, there was a lot of selling just recently, and it was the largest volume since the last base was a sell. So I don't think this one. It does have a lot of fund ownership, but I think that we may have peaked, and it looks like the funds are going down. So I just don't think, in terms of a stock to on a purely momentum basis, I think this is a good stock to be. I think it's a good company to be a customer of, but not own the stock. That's kind of the thing I think about here. It just doesn't look to me like this one is going to move the right way. But it's got 47% fund ownership. I do think that funds may, if the retail numbers are bad, if you see a spike up in unemployment, though this company doesn't really appeal to people that are going to be unemployed in the retail market, I do think that this is going to be weak into the end of the year. So I'd be really careful about this one. I just have a gut feeling, and it's not really based totally on the chart, but it's based on sort of their industry. I don't like the fact that they're going sideways a little bit. I can't recommend Stitch Fix, but you might want to watch list it. I think it might be. It's just not my thing. I just don't think I can recommend it. It just doesn't look, like where it needs to be. Need more good buy point tips. Me too. Me too. No, I try to find the best buy points, and I'm trying to put out as many of the good buy points as I can. I may be doing now. I do have a buy point on Marvell, which I haven't put out a trade alert on it yet. But if you're looking for a buy point on a stock, which I think has some legs, this one might be good to look at. This is Marvell Technologies, and I kind of want to show you sort of where it's at. This is a relatively, this is a well-known company. The checklist on it is pretty good. It's 8 out of 9, so that's pretty good. It's got lots of fund ownership, 61%, and it definitely has been increasing in terms of its fund ownership, so that's very good. And Fidelity Contrafund is in it, so that's all very good. It's also in a buy zone right now. It's also in a buy zone right now. The flat base pivot on this is 41.34. Now it's 42.75. So I do think that this is a buy. I do think this one is a buy. Marvell Technology Group, and the buy point. This isn't probably as explosive as Fastly. I'll be honest with you, but I think this one's a good buy. 42.75 is the price on it currently, and the buy point on a flat base 41.34. So pretty good on that. Pretty good on that. That's a buy point that I wouldn't throw everything on there. I mean, I wouldn't throw everything on that table on that one, but I would consider it probably half position, possibly even a full position. I did put a full position. I did buy a full position of Marvell Technology for the small portfolio, and I guess I also have a full position in Qualcomm, QCOM, as well. So that's another one that I have a position in. All right, let's look at SWBI as a potential SWBI. Let's look see if we've got anything there that is going to make sense. And that's Smith & Wesson. Well, would I buy Smith & Wesson at this point? Probably not, and I'll tell you why. Based on the polls I'm looking at, it looks as if, and again, I'm just looking at the polls. Please, people, don't hate me for this. It does look like, all things considered. I mean, it's going to be a contested election, but it does look kind of like, I mean, the law and order issue is getting a lot of traction. A lot of people are afraid because, when you're living in Portland, Oregon, and they're burning down, the bodega next door, you're not too excited. But I don't know if Smith & Wesson is the right way to go. Typically, when we see, we see the fear index go up, we're going to see interest in something like Smith and Wesson. It has been trending downwards, which is actually kind of a good sign. But it does have a 90. By the way, it does have a 97 rating. So it's a mixed bag. There's quite a few. There's quite a few funds in there. This is a kind of like a Smith and Wesson. It's a good company, but it's kind of like a tobacco stock. I think it's gonna be very profitable. But I don't know if it's gonna be all that explosive. Would I be in the stock? Probably not. And the reason is that I just right now don't like the way that this trend line has moved. But I'm looking at the weekly chart here. Let's look at the daily chart to see. I think it's off of its highs. I think it's gonna find a home right here on the 21-day exponential moving average, which is about 1665. It's 1669, so it's literally right on there. The relative strength has trended down. I think that we've seen most of its upward movement, and I think we really saw that. I think we really saw the rally in July and August, and really, I think it had a lot to do with the fear index, to be honest with you. So I don't know if I really would want to be in that stock. It's a good watch list. It's a very strong stock, but I'm not sure that I want to do it. Fantastic. Fantastic. You made 28%. That is stellar. Here's the thing. When you get in, and this is the 20% rule. And this is an IBD. This is a William O'Neill rule. And that is basically you want to start looking to take your profits if you've made 20% in the stock. Because typically stocks, they'll move up very quickly and then they'll kind of hang out and then they'll move up quickly. So it's not a straight up or straight down. If you've made 28% in the stock and you still like the stock, here's what you do. Take 50% of your holdings and sell them and take that in profit. But leave 50% in there so that if there's another movement up, you're not out of the stock. So that's what I would do. I think that looks really, really good. So congrats. Good move. NFE. Thank you so much, Wendy. I always love your questions. NFE. So let's look at NFE. That New Fortress Energy. Wow. Okay. I wasn't very much aware of this stock, but this looks good. There's been a little bit of selling, but we did have a very nice volume there. In 21 days, there's earnings on this. Let's look at the chart and let's look at the criteria. We do have increasing ownership in it. That's excellent, by the way. The checklist is good at 7 out of 9. That's very good. Let's look at some of the ownership in the funds and let's look at the sector. The only problem that I have with this, and this is a good stock. The only problem I have with this, unfortunately, is the sector that it's in. It's 182 out of 197. I just think that you're going to be more successful deploying capital in a sector that's in the top 20% of all sectors. It's sort of like the old saw with real estate, that you don't want to buy the worst house in the best neighborhood. Well, in stocks, you want to buy the best house in the best neighborhood. So you want to be in the top sectors and you want to be in the best stocks. So that's kind of the thing. The reason you want to buy the best stocks in the best sectors is because of stocks you don't have to buy 100 shares. You can buy 1 share. You can buy 2 shares. You can buy 3 shares. That's the advantage of stocks. So with stocks, it's not like real estate where you want the best house in the worst neighborhood. With stocks, you want the best stocks in the best neighborhood. So that's why you want to be in that top 20% of the industry groups. So you don't want to be in the bottom. It's just easier to make money if you're in that top group. So that's kind of the that's that on that. So also Plug. So Plug is kind of a penny stock thing. And let's see how it's doing. I haven't really done my under $10 list because there are some good stocks that are under $10. This is Plug Power, and it's pulled back a little bit. These are cool because this is a little bit more. This is a little bit more lottery ticket. The buy point on Plug Power is basically 1435. It's 1788, so it's pulled above that. This has a probability of pulling back probably to the consolidation at 1435. So I would look for this one to pull back to the consolidation. Let's look at the buying criteria, and it is 799. That's definitely good. And the funds, we do have funds in it, and they're increasing ownership, so that's very good. Let's look at the sector. Well, the sector is excellent. So this is just checking some boxes here. I do think this is going to pull back probably into the pivot, and this one might be a potential good deal because it's a maker of fuel systems for industrial off-road market. And I do think the market for electrification and batteries, especially for car batteries, is growing. So this looks pretty good, but I wouldn't buy it at this point. I would wait until it pulled back within 5% of the pivot, and the pivot is 1435. So 1435 on that. I would wait on this one. Watch this one. This one might be good for a payday. Well, I have spent almost an hour job owning here, and I just wanted to tell you I didn't get to everybody today. I'm sorry about that. A lot of people have started to tune into the show, and I really, really appreciate that. If you want to get on the action trade alerts list, it is super easy to do. All you have to do is, if you're on Facebook, YouTube, Twitter, or not Twitter, Twitch, or Periscope, go to www.dallastradingfloor.com and just sign up for it on the site. And of course, it's all free, and you can desubscribe anytime you like as well. And if you're on TikTok, super easy to get onto the Action Trade Alerts list. Very easy. All you do, go to my profile, hit the link, and a sign-up page will pop right up. Just put your first last name in it, and an email, and press submit, and you'll be on the Action Trade Alerts. So until tomorrow, everybody, thanks for watching, and happy trade.